Hello, everyone. I'm Judith Peterson, CMO of Cerulean Sky. Welcome to Launchpad 21. We focus on go-to-market strategies and approaches in B2B, fintech, and the investment management industry. Today, we're sitting down with Jace Schuppan, who's a seasoned professional in the investment management industry and well-respected. Welcome, Jace.
Hi, Judith. Thanks so much. Appreciate you having me. Excited to be here today.
So, Jace, in your world, what does launching look like in 2021?
Yeah, in my world, launching is really financial advisors and investment professionals building solutions to help investors achieve their financial goals. So I'm spending my time consulting investment professionals who are exploring the creation of investment vehicles to distribute their strategies, particularly public and private fund products that can be distributed broadly to investors.
So are you seeing a lot of activity in any particular area?
Yeah, in the registered fund space, the trend and activity currently is really in the ETFs, exchange traded funds. There are over 300 new ETFs launched in 2020, which was a record for new fund launches. I certainly think that trend will continue as investor demand for ETF products continues to grow. Additionally, the SEC adopted the ETF rule in late 2019, which streamlined the approval process and reduced the time and expense to bring new strategies to market. So additionally, the path for actively managed non or semi-transparent ETFs began really in 2020 when they greenlighted several non-transparent ETF wrappers. So I think we're really going to see continued growth of actively managed non-transparent ETFs as more active managers look to get into the space. Now, conversely, I will say conversely quickly, there were over 175 ETFs that closed or liquidated in 2020 as well, which was also a record. So there is clearly a lot of activity happening in that space, but it's certainly an endeavor that needs careful consideration.
So to that end, what advice do you give clients to help them navigating these launches?
Yeah, number one really is to think about positioning, right? Which has multiple facets to consider. Once you've got a strategy identified and the vehicle and a wrapper is selected, you really need to think about how you want to position your product in the market and how your investment solution fits into investor portfolios. So I always think a positioning plan to identify your targeted channels and strategically planning your market engagements is critical for long-term success. I kind of always ask those. Oh, go ahead.
Oh, no, because I want to ask a follow-on question, but I don't want to miss a thing.
So I always ask the who, what, why. Those are really important questions to answer. So, who are the competitor funds and how do you compare and contrast to those products and firms? What's your story or message? Is a fund a broad-based solution or a niche product that is targeted for a specific audience? Who are your targeted channels and when and how do you strategically engage those channels? Why should investors select your fund or firm? What does your fund solve or position the investor for? And what does it replace in an existing portfolio? So those are clearly some important questions you got to sit down and ask yourself. And then from there, to me, it really comes down to passion, persistence, and patience. You're looking to attract long-term investors, and a fund's a long-term venture. So you got to expect there will be adversity, disruption, and letdowns along the way, but you can't let those things derail the endeavor. 3, 5, and 10-year milestones are often key standards that investors are going to evaluate products by. So be prepared for many investors to say no early on, as they typically use the wait and see approach. Different market cycles, impactful financial events, et cetera, can help tell your story over time. So you take advantage of those occurrences, be patient for the yes. You can't speed up the clock. So that patience, persistence, and professionalism will go a long way. And finally, investors are really buying the manager and firm as much, if not more, than they're buying the strategy. So seeing that passion, honesty, and belief in your strategy is vital to attracting long-term investors. Today, you really have to play the part of a consultant and thought leader that investors seek for solutions. So again, there's a lot of factors to consider, a lot of questions to ask, but you got to focus on the things you control and diligent work of your plan over the long haul. So that'll be critical to having a successful fund endeavor in the long term.
It's very interesting the way that you frame what in my world, in the marketing world, right? The go-to-market approach, right? Have you done your segmentation? I always say, so what, who cares? And also, just because you're talking doesn't mean someone's listening. I do think it's interesting in general, an overarching theme for investment management B2B and fintech, is that people do make decisions through thought leadership and quantifiable metrics. And telling your story that way, I think, adds to authenticity and trust, which is exactly what you were getting at. So I guess, the advice that you give for someone that is really starting out, let's right size that advice for someone who's maybe starting out in the investment management industry. I know that there are a lot of times the series trust models, which maybe is a vehicle that's better for people starting out. Go into detail a little bit. I kind of asked you a two-part question there. Go into detail a little bit about the advice you give, and then your thoughts on the series trust model.
Yeah. Honestly, I don't think the advice really changes much if you're just starting out in the investment management space. I mean, as I mentioned, managing money across those various market cycles and events is really a key consideration factor for investors. So, and gaining that experience and tenure is something that will only come with time. So that's not to say that there's not an opportunity really for emerging managers, but it likely will require some additional patience and persistence. Additionally, I think when you're starting out, your partners and service providers are really important, obviously for any endeavor, but especially when you're a new entrant into a space. And so you want to really select partners and service providers that are consultative, and they'll provide you guidance and support to your budding firm. As far as the series trust model goes, yeah, absolutely. A series or shared trust does offer some economies of scale for both a time and cost perspective. So creation timelines are reduced since you're joining an already established trust. You've got creation costs are typically lower because you've got existing fee arrangements with legal counsel and other vendors that are established in that shared trust. And from an ongoing perspective, the funds benefit in a shared trust from the scale and efficiencies of sharing those fees and resources. And really that means the advisor can focus on their time and attention on the portfolio management and distribution, which are obviously the two most important things in running a fund. So certainly a shared trust does offer a cost-effective and efficient solution that's often attractive for advisors launching a fund product.
Well, that is some great advice, and I really appreciate your time, Jace. And I think that people that work with you are really very fortunate, because I know you're a person of incredible integrity. So I will put Jace's contact information below. Thank you, everyone, for joining us. Have a great 2021.
Thanks so much, Judith. Really appreciate it.